بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين على نبينا محمد وعلى آله وصحبه أجمعين. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to another episode in our series on Islamic finance. We've been talking about Islamic banking. We talked about Islamic capital market to a much lesser degree. We mentioned that the third major component of modern financial systems is the insurance sector. And insurance is, according to the overwhelming opinion of modern Muslim scholars, it's an unlawful contract. We mentioned in a previous episode that when this contract first reached the Muslim world, it was an invention of the Western world, they undertook the process of Takaaful Islamic to see what's going on here. What is the essence of this contract? What is the subject matter of the contract? And they determined that it's an exchange of money for money. And so this involved all kinds of violations of the Sharia. First of all, an exchange of money for money in an exchange contract is supposed to be spot, meaning the seller gives his money and the buyer gives his money. They exchange the money there and then, and each one walks away with his counter value from the transaction. And if there's a delay, even if the amount is the same, then that's called riba nasa'a. So insurance involves that element. But beyond that, what the subscriber ends up paying in case the insurer pays him, the two amounts will be completely different. You know, maybe the subscriber has taken out life insurance and he pays $200 or whatever for that first month, and then after a month he dies. So his beneficiaries get $50,000 or $100,000 or whatever, the stipulated payout for that policy. So when the contract ends up being an actual exchange, the amounts of money are unequal, 99.9% of the time. So then you have the other aspect of riba al-fadl. Then it may be that that subscriber to the insurance pays $200 a month or whatever the payment is for the entire span of the contract, and whatever event that he's insuring himself against never occurs. And therefore, it ended up being a completely one-sided exchange contract. The company got money, and it never ended up paying anything to the subscriber. So that resembles gambling. Gambling is a zero-sum game. There's a winner and a loser. And then in case the subscriber does get a payout, he or his beneficiaries get a payout, then from one angle you could consider the subscriber to be the winner and the insurer to be a loser. So there are elements there that also are related to gambling. And the uncertainty of the payout falls also under the rubric of what's called gharar. If you contract to buy something and you're not sure if you're ever going to get it, that's an extremely high amount of gharar, which renders an exchange contract invalid. So all of these elements were present in conventional insurance, and therefore the vast majority of scholars said they're unlawful. A conventional insurance contract, unlawful. Some small minority of scholars said, yeah, there are all these elements in them which make them prohibited, but you know, there's an element of need here. The function of insurance is that it distributes risk across a large pool of people, and therefore it serves a societal function. Another thing that insurance does is that because the insurance companies, they calculate the premium in such a way that they're taking in more money than they pay out, then insurance companies end up having a lot of cash on hand. And so what are they going to do with that cash? They don't want it to just sit there, so they invest it in the capital market or in some kind of instruments that will yield them profit. And so they are a means for capital mobilization in an economy. Despite that, the majority of scholars said, yeah, there's a need, but still, this means of fulfilling these needs, it's just got too much haram attached to it. So then they looked around for a solution. And the solution that they came up with is called Takaaful. Now, Takaaful is derived from a term, kafala. The root word means to take care of. And this is a derivation of that three-letter root, which involves two parties who are doing the action to each other. So Takaaful means mutual solidarity, two or more parties who look out for each other. And there's evidence in the Sharia that if a contract involves tabarru', an intention for benevolence, then the normal rules of riba and gharar don't apply to it. The Sharia is much more lenient with regard to tabarru' contracts than exchange contracts. In an exchange contract, each party wants to achieve his personal benefit, and they don't really care about the benefit of the other party. And in tabarru', the donor is intending to do something to help out the other party and is not seeking anything back from the recipient. They're instead seeking a reward from Allah. And now there are various types of tabarru' contracts. One is a loan, and as we mentioned and explained in some detail in an earlier episode, we're not going to go into why that is, but if a loan were an exchange contract, even if the amount given back is exactly the same amount as what was originally given, then that falls under the category of riba and nasa'a, because if it's an exchange contract of money for money, it should be spot. But because the intention here is not an exchange contract, it's to help someone out, that Sharia objection is waived for a loan. And other kinds of tabarru' contracts would be a gift, an outright gift, or wasiyah. A person makes a will saying that, 1/3 of my estate or something less than that will be delivered to so-and-so after my death. These are some other examples of tabarru' contracts. Now, one of the problems with a takaaful contract is that if you say that, okay, this is a donation, the persons who are subscribing, they somehow are a group of people who want to help each other out. And each of them agrees that I'm going to donate $200 a month to this fund for the express purpose that if anybody has a misfortune, and that misfortune would be stipulated in the contract, the nature of the misfortune, that those fellow participants in this pool, if any of them are beset by that stipulated misfortune, then they would have a right to take a stipulated amount of money from the pool. So on the one hand, this is a donation, but those people who take out of the pool are also people that donated to the pool. So there is some kind of element here of an exchange. We're up on a break. We'll come back, inshallah. Assalamu alaikum. Welcome back. We're talking about takaaful, an attempt by Muslim scholars to solve problems, Sharia objections to the contract of conventional insurance, which despite having certain useful social functions, it has all of these problems of interest and gharar and riba al-fadl, riba al-nasa'a, gambling. There's major problems with it. So the strategy that was devised or proposed to remove these Sharia objections is that the contract should not be an exchange contract. It should be a charitable contract or a tabarru contract. And tabarru in Islamic Sharia has that concept of one party who is interested in helping another party, and when that's the motive, then the strict Sharia rules related to exchange contracts are waived. Now, there are still some kind of lingering issues with Takaaful because it's not a pure tabarru contract as we normally think of. Contracts like a gift or a bequest or a loan, a non-interest bearing loan. And the issue with Takaaful is that, yes, all of the contributors to this fund are saying, I'm willing to give up this amount of money. If I never get paid out of it, that's okay with me. But in case one of these things happens to me that we're all agreed we should be protected against, then in that case, a particular individual would be getting back from the fund. Now, is there some kind of Sharia basis for this that's a little more precise and a little closer to the way that Takaaful works than simply a desire to help out someone? You know, the normal way that tabarru would work is that, you know, somebody, let's say there's a flood or a hurricane or something, and then an appeal goes out and people donate to help the victims of that situation. The way that Takaaful works is that unless you've already signed up for this program, if you have a catastrophe, you're not going to be covered by the Takaaful. So is there some kind of a Sharia precedent for this issue of people contributing to something and then also getting out of it? The particular format that seems to be closest in my mind to what is going on here and where there's a clear issue of ribawi items that are not subjected to the rules, the normal rules of riba, is a practice that was called tanahud or nihd. And there are at least 3 narrations in the Sunnah about this situation. An incident that we mentioned in a previous episode, Jabir ibn Abdullah narrated, Allah's Messenger sent an army toward the east coast and appointed Abu Ubaidah ibn Jarrah as their chief, and the army consisted of 300 men, including myself. We marched on till we reached a place where our food was about to finish. Abu Ubaidah ordered us to collect all the journey food. Now, each person was carrying his food. So Abu Ubaidah said, okay, everybody give me the food. And he kept on giving us our daily ration in small amounts from it till it was exhausted. Jabir said the food that I had brought with me was dates. Now, dates are a ribawi item. You're not allowed to trade dates for dates except like for like. You know, if it's 10 dates, I'm giving you 10 dates, and you're giving me 10 dates back. That's the only way that an exchange contract involving dates is supposed to work. So, for sure, Jabir wasn't the only one carrying dates with him as his journey food. That was a staple food in Arabia. And, you know, other kinds of food that were staples are also ribawi items. So, when all of these items are contributed into this common pool, maybe one person had 10 dates and another still had 20 dates. So at some point, they were only getting 1 date per day. So the person who contributed 20 dates, maybe he wasn't able to eat 20 dates. Whereas the person who contributed 10 dates, maybe he ended up eating 15 dates. So the rules of riba were not operative in this situation. Right now, all we're seeing from this narration is that what some of the Sahaba did. But what happened was that when they got to the coast, there was a whale, they ate, and when they came back to the Prophet ﷺ and explained to him what had gone on, he didn't say, hey, wait a minute, you violated the rules of riba al-fadl. No, he listened and approved. What you did was good. And in another incident where the Prophet ﷺ was involved, again, they were on a journey and they started to run short of provisions. And somebody suggested that they slaughter camels. And Omar said, well, if we start slaughtering camels, we won't be able to reach our destination. So they gathered all the food together, and the Prophet ﷺ made dua to Allah for barakah in the food. And various people brought various amounts of food, and they all laid it out on one dastarkhan, this leather skin. And for sure, some people ate more than they contributed, and some people contributed more than they ate. So again, this is an issue of ribawi items where the prohibition of unequal exchange was waived because everybody's intention there was to help each other out. And then these were, some could say, well, this was on a journey, a special case. The Prophet ﷺ, he mentioned that when this particular tribe known as the Asharis, he said when they run short of provisions in military campaigns or they run short of food for their families in Medina, they collect whatever they have in a cloth and then share it equally from one vessel. Then he finished describing them by saying, they are of me and I am of them. So that last statement, again, is explicit approval of this behavior. The commentators of this hadith, like Ibn Hajar, he mentioned that in case there's a balance from the accumulated supply, it should be distributed among members if it's not used for another journey. And the relevance to Takaaful there is that one of the things that happens at the end of a year of contributions to the Takaaful fund is that the surplus is distributed back amongst the participants. So there's a precedence then in this current practice from that earlier practice of nihd. Some people have raised the objection that, well, Takaaful, modern Takaaful is with money, and this practice in the time of the Prophet ﷺ was with food. So it's not exactly the same, but the fact that those were ribawi items makes that objection not so strong, in my opinion. And I mean, this practice of Takaaful has been accepted by the Islamic Fiqh Academy, of the OIC, of the Muslim World League, AOFI, the Central Bank, the Sharia committees of the Central Bank of Malaysia. The principle is widely accepted throughout the Muslim world among Muslim scholars. But, there are anomalies to Takaaful that make it different from your normal tabarru contract. So not everybody is satisfied as nihd as the basis upon which Takaaful should be understood as a contractual type. Some people say it's al-iltizam bit-tabarru', which means the commitment to donate. And this is the principle that was chosen by AOFI, the standard setting body in Bahrain, as the conceptual base for Takaaful. And one of the reasons that they've chosen that, they say that the Maliki jurists laid down a principle whereby if a person commits himself to do a good deed without subjecting it to other conditions, he's obliged to fulfill it as long as he does not die or become bankrupt. And there was a difference of opinion among scholars as to whether a gift takes its effect if the recipient hasn't claimed it yet. And so the Malikis were of the opinion that it occurs once there is that intention to, you express the intent to give it. Now, in what way then does the setup, where does the insurance company come into it? Is this a situation where people come together and they don't know anything about how to run this enterprise, and they're just all volunteers, and it's a co-op kind of a situation. That's not the way it's been structured throughout the Muslim world. The idea is that there's a legal entity, which is the fund of the participants, and then there's an agent, which is a company that's set up to administer that fund on behalf of the participants. And so when somebody needs to be paid because of the event occurring for which there's a coverage for that kind of a misfortune, then that company is the agent of the participants in paying the sum that these people have agreed should be paid for that kind of event. Now, how is that different from a normal insurance arrangement? An insurance company, a conventional company, they just take the items from people and they can use it freely. A Takaaful company cannot use the funds in that pool to pay their employees and stuff like that. They charge a fee to the participants, which is separate from that fund, and that's what they use to pay their operating expenses and where they get their profit from. We've come to the end of our time. Assalamu alaikum wa rahmatullahi wa barakatuh. Allahu a'lam.